Hey, this is Chris Franco, and you are listening to Compound Money Quietly, the CMQ Investing Podcast. CMQ investors, welcome to the show. It's great to have you here. In this episode, we are talking about the power of brand as not only a model, not only as something that's relevant right now, and I'm going to read to you directly from a brand new article in the Wall Street Journal about inflation and how brands are upping their prices. And they're able to do that because they have a strong brand. The article reads as follows. Corporate giants, including Procter & Gamble, Nestle, and Verizon Communications, say they plan to continue raising prices or pushing customers to buy more expensive products into 2022 to offset fast-growing costs amid a global supply chain crisis. Gillette razors, Nestle coffee, and Chipotle burritos are among the products that could get more expensive in the coming months. By the way, Chipotle burritos, that's already gone up. So I guess they're going to go up even more, and I'm still going to buy them.
Extra guacamole, please.
Price increases so far have paid off for makers of household staples as shoppers, particularly in the US and Western Europe, have remained loyal to big-name brands. Now companies are counting on customers to lift sales and offset higher costs that have stressed their bottom lines, even as broader inflationary pressures mount, and some analysts question whether shoppers will start to seek cheaper alternatives. We have not seen any material reaction from consumers, P&G Finance Chief Andre Schulten said last week, referring to a string of price increases that went into effect in September. P&G, maker of Tide detergent and Pampers diapers, last week announced the third round of price increases, which will go into effect over the next few months, and told investors to expect profitability to accelerate as the year progresses. Nestle, the world's largest packaged food company, raised its full-year guidance for the second straight quarter as consumers continue to drink more and better coffee at home, even as pandemic restrictions ease. Chipotle Mexican Grill said price increases haven't turned people off its burritos. Higher menu prices helped net income more than double in the most recent quarter, compared with the year before, despite higher labor and commodity costs. I'm going to bring this back. This is so much of what Buffett and Munger have said since back when they first bought See's Candy in 1972, I think. And just the importance, even especially during an inflationary period, of owning businesses that are immune to inflation because they have a strong brand, because a strong brand often means you can raise your prices. So I will continue. Analysts question whether Nestle's confidence in demand for pricey coffee is overblown. Others wondered if P&G's market share gains will erode or reverse as more of its price increases kick in and as consumers become increasingly pinched by inflation. Both companies reiterated their confidence. Of course, they're going to reiterate their confidence. Very rarely do you listen to an earnings call and they're like, we're screwed. Both companies reiterated their confidence. Nestle said its coffee category is its biggest contributor to growth, while its Nescafe, Nespresso, and Starbucks brands are all growing. Okay, U.S. inflation accelerated in September. Okay, we don't need to read that. We know it accelerated, and I don't want to make us depressed on a Monday. It goes on to say, though, that companies with well-known brands will most likely or more likely succeed in raising prices than budget or smaller brands in any given category because they are better able to keep products in stock, and shoppers often see well-known names as a safer bet. Let me read that one more time just because it's important about this model that's really valuable for us to know and use as investors. Big companies with well-known brands will more likely succeed in raising prices than budget or smaller brands in any given category because they are better able to keep products in stock, and shoppers often see well-known names as a safer bet. One of the big ideas that carries a lot of weight is the power of brand, and I can explain this from a marketing perspective. In marketing, the whole purpose of marketing is to build a strong brand. And the reason you build a strong brand, well, there's a lot of reasons, but you create something called brand equity. And brand equity is value that's associated with that brand that rubs off onto other things. So Apple, for example, has a lot of brand equity. Apple can come out with a car and they slap that logo on it, and Tim Cook comes out and he's like, hey, everybody, we have a car now. And everyone's like, they'll go out and buy it. Apple has never made a car before, but it's like that brand carries a lot of trust. There's a lot of confidence that brand instills in the consumer. And you're seeing this, I guess, play out with inflation. But as this article in the Wall Street Journal points out, these bigger brands that are well-known, they're established, they're able to raise their prices and not have any issues. If you and I put out a I guess, a amazing coffee. We have a line of coffee. We're competing against Starbucks. We have, stores right next to each other, and our coffee is subjectively better. If in a taste test, we win 9 out of 10 times. Because we haven't been around, because we're new, because we don't have the same brand equity, the same brand awareness, we are not able, I'd say 99 out of 100 scenarios, we're not able to charge more than Starbucks, or at least do so sustainably and beat them, because they're the primo coffee. Who are you? When you are a new brand, you can take the risk of raising prices and saying, we're the primo, but brands convey quality. And so if you don't know the brand at all, you're not able to do that. And furthermore, to build brand, it takes money. So companies that are able to, be profitable, that are able to, allocate capital intelligently, that are able to keep their distribution costs low, they can spend money on brand and build that up over time. And that creates an informational advantage, like informational scale. Think of advantages of scale, but with information. I believe in I believe in Charlie Munger's initial worldly wisdom speech back in 1994. He talked about how Wrigley's chewing gum, just by nature of it being so known, you're willing to buy chewing gum, you're willing to buy something and put it in your mouth. But if I came out with, CMQ chewing gum, I think people might be a little skeptical. I'd have to spend a lot of money to create that trust, to build that trust. And going back to these bigger brands, it's not always the best thing to buy a bigger brand, because it could be, just maybe it's a maturing business. But when we're in an inflationary period like we are now, something that, and I talked about this in an episode called, it was about how to handle inflation according to Warren Buffett and Charlie Munger. In the past, they've talked about you want to buy businesses that have pricing power. Because again, as inflation hits us, the businesses that can raise their prices and not lose customers can continue to be profitable. And you're seeing this play out right now. So the reason I wanted to share this is because, again, I look for these time-tested ideas, and it's really neat when we see them actually play out in real time or in present day, because it shows that they're actually time-tested. They still hold up. So brand is a model that really matters. I think if you're interested in buying individual stocks and you're not thinking about how the brand is perceived, you're messing up. I'll leave you with one last thought here. Facebook's brand is in the gutter. We're on Instagram. There's no problem with Facebook, but from a standpoint of Facebook wants to get into the consumer electronics business and be more aggressive and have us go into the metaverse. They have a thing now for workplace. I saw a bunch of ads for it last night. There's a lot of hesitation because Facebook's brand has just been continually eroded by a series of short-sighted management decisions that have eroded trust. So brand is critical. It conveys confidence to the consumer, and you can raise prices. So on that note, I'm going to cut off the podcast here. This has been Compound Money Quietly, the CMQ Investing Podcast. My name is Chris Franco. Thank you for listening. We'll talk soon.